Well, our next guest has what some would call a contrarian view on the stock market. He disagrees with the idea that the rally is overextended and has outpaced improvements in the economy. Joining us from Minneapolis this morning is Jim Paulsen, the chief investment strategist at Wells Capital Management. So, Jim, talk to me about this contrarian point of view. Why do you think we have more room to run here?
Well, I think that from the March lows, Carol, the adage on Wall Street's been, the market's ahead of its fundamentals. And yet, I think it's been almost the other way around. I mean, if you look back in the first quarter of this year, the economy contracted at 6.4% in real GDP. In the third quarter, it advanced by 3.5%, which means that in 6 months, the real rate of growth in the economy improved by almost 10 percentage points. And a number of statistics have been improving far faster than anyone could imagine 6 months ago.
You know what I'm going to say.
I think that's what's pulling the market higher.
But so much of that has been stimulus money. I mean, the big question is, once we back off that stimulus, can the growth continue, and then consequently support earnings and stocks? I mean, do you think we can?
I think so. I think the next big catalyst, I think, for the stock market, it gets to the point you just raised, Carol, and that is there's still this great doubt that we're going to double dip and that this thing's just being propped up by excessive government medication. And I think the thing that's going to change that debate on Wall Street will be the return of job creation again, which I think is coming in the early part of next year, maybe as early as January, for example. If we return to positive job prints, then all of a sudden we have a self-sustaining economic recovery. Profits go to jobs, jobs go to income, income produces spending, spending produces profits, and now you've backed away from this idea of double dip, and the discussion becomes more how strong will the recovery be. But if you go from where we are now to a sustainable recovery consensus, I think that's another leg up in the stock market.
Jim, I don't think you're alone in expecting that we'll see potential job positive numbers in the early part of next year. I think the bigger question out there obviously is, will it be enough to eat into that unemployment rate? And there are those who think if you psychologically get excited about positive job numbers early in 2010, what if we all of a sudden see a reversal of that?
Well, I don't really think there's reason to expect a reversal, because if you get to that point, as again, you got a self-sustaining cycle. Look what the consumer is going to be looking at if job creation returns in the first quarter. They're going to be seeing return of jobs. They're going to see 4 to 5 months of rising home prices. They're going to see 3/4 of a rise in their 401k statements going on. And suddenly their net worth has been up for 2 or 3 quarters in a row. The headlines get better. I think it becomes more of a self-fulfilling cycle where maybe sometime by middle of next year, the Fed can even start to pull the medicine away and the economy can continue to go on.
Hey, it's Adam, Jim. I love the way you're talking. That sounds great. Question, though. I mean, we do have our work cut out for us in the sense that we've got to reemploy 15.5 billion people, find full-time employment for the 9.2 temporarily unemployed, and, of course, we've got to create 120,000 a month just because of population growth. I mean, that's a lot ahead of us, isn't it?
Well, a couple things on the unemployment rate. I think the unemployment rate itself is not a deterrent to growth in the future. If the unemployment rate stays at 10% during this recovery, the economy will still grow at the rate of growth of job creation. Even if you don't bring down the unemployment rate, it doesn't hold back. If you do bring back down the unemployment rate, that adds to growth even more as you reemploy people.
Okay.
But the rate of growth will be hurt if the unemployment rate rises, but not if it stays at a high level. I think it's going to come down as well.
All right, we will certainly see. Hey, Jim, thank you so much. Jim Paulsen, chief investment strategist at Wells Capital Management, joining us from Minneapolis.